Makes sense. Now let's look at their expenses. Their operating expenses have increased to 123,316 million. That's up from 19,613 million last year. Is that a red flag?
Not necessarily. It's natural for operating expenses to go up as a company grows and invests in new initiatives. The key is to analyze where that money is being spent and if it's being used effectively.
Okay, so let's break it down. The report gives a detailed breakdown, and we see increases in raw material costs, employee benefits expenses, and other operating expenses.
The raw material costs, that's likely a combination of things.
Yeah.
Global supply chain issues, inflation, and increased demand. It's a challenge a lot of companies are facing.
And the higher employee benefits expenses probably reflect their commitment to their employees and their efforts to attract and retain top talent.
Right. You can't build a successful company without talented and motivated people. It's an investment worth making.
Okay, let's shift to their cash flow statement. What's that telling us?
It shows they're in a strong cash position, generating good cash flow from their core operations. They've generated 3,578.86 million from operating activities, which is very positive. It means they're making money and managing their cash flow effectively.
So they're making money, but what are they doing with it?
Well, they've invested heavily in property, plant, and equipment, a total of 3,137.69 million. This tells us they're expanding their capacity, upgrading their facilities to support their growth plans. They're not afraid to reinvest in the business.
They're thinking long-term, building for the future. And of course, there's that strategic investment in MMR FLB technology, which we talked about earlier. They're also paying down a chunk of their debt, improving their financial leverage.
All positive signs. They're investing in their future, managing their debt responsibly. It's a balanced approach.
Okay, so their cash flow statement looks healthy. What about their key financial ratios? Any cause for concern there?
Overall, their ratios indicate a well-managed company. Their EBITDA margin, PAT margin, ROCE, all within healthy ranges. Their debt-to-equity ratio has improved, and their interest coverage ratio is strong. They can comfortably handle their debt obligations.
So far, so good.
Yeah.
But are there any areas where we should dig a little deeper?
Well, their current ratio has dipped a bit. It's something to monitor. We need to understand what's driving that dip and whether it's a potential issue. It might be nothing, or it might be a sign of something more serious. More research is needed.
Always good to be thorough.
Well,
Okay, so their financials look solid, but numbers can only tell us so much. Let's dive into the management discussion and analysis section of their annual report to really get a feel for the brains behind the operation.
absolutely. That's where we get a glimpse into their thought process, their vision for the future. It's more than just numbers. It's about understanding the people driving this company forward.
Right. They start by acknowledging that the global economic environment is challenging with inflation and geopolitical uncertainties. But they also highlight the resilience of the Indian economy and their own confidence in navigating these headwinds.
They're realistic about the challenges, but they're also optimistic. They've been around for over 40 years. They've seen it all. They're not easily rattled.
They've weathered the storms before. They also reiterate their commitment to diversifying their revenue streams, reducing their reliance on the automotive sector to 60%. That's a key part of their strategy.
It's about building a more resilient business model, not putting all their eggs in one basket. The automotive landscape is changing, and they're adapting to that change.
Smart move. And their management discussion also emphasizes their focus on those Industry 4.0 technologies we talked about earlier. Smart manufacturing, data analytics, automation. It's all about enhancing efficiency and driving innovation.
They're not just talking about it. They're actively investing in these technologies across their operations. They see it as a key differentiator in today's competitive landscape.
They're staying ahead of the curve. And it's not just about technology for technology's sake, right? They're also focused on developing and strengthening their XEV business, aiming to grab a bigger share of that rapidly growing market.
Again, they're walking the walk. They point to their recent investment in MMRFIC technology, that company specializing in aerospace and defense components, as a prime example of their strategic diversification. They're putting their money where their mouth is.
They're backing up their words with concrete actions. Now, no business is without risks. Sansera acknowledges this in their management discussion, identifying key risks like counterparty risk, procurement risk, regulatory and legal risk, and cybersecurity risk.
Right. But what's important is that they're not just listing these risks, they're outlining their strategies for mitigating them. They're taking a proactive, thoughtful approach to addressing those potential challenges.
That's reassuring. They're not just hoping for the best, they're preparing for those bumps in the road. So their management discussion reveals a clear vision, a commitment to innovation, and a proactive approach to risk management.
It does. They're not just reacting to the market, they're shaping it. They're not just managing risks, they're turning them into opportunities. And they're not just talking about the future, they're building it.
Okay, so they've got a lot going for them. But the business world is a complex and constantly evolving landscape. What are some of the key things investors should be looking for as they assess Sansera's future prospects?
That's a great question. There are several factors to keep in mind. First and foremost, their ability to execute that ambitious diversification strategy. Can they really achieve those growth targets in those new markets, those high growth sectors? Competition is fierce, and those sectors are constantly evolving.
So it's a matter of show me the money, right?
Yeah,
Investors will want to see concrete results.
exactly. Actions speak louder than words. Another crucial factor is their ability to maintain their competitive edge. The automotive industry, especially the EV sector, is constantly innovating. They need to stay ahead of the curve, constantly invest in R&D, and differentiate themselves from the competition.
It's a race with no finish line. And then there's the global economic environment. It's volatile, unpredictable. How will they navigate those uncertainties? Can they weather the storms?
Right, and don't forget about the human factor. Can they attract and retain the top talent they need? That's crucial in any industry, but especially in a highly specialized field like precision engineering.
It's not just about machines and technology, it's about people. Building the right team is essential.
Absolutely. And of course, their financial management is key. Can they manage their debt effectively? Can they maintain a healthy financial profile? Investors want to see stability and responsible financial stewardship.
Those are all important factors to consider. So there's a lot to unpack here.
There is. But I think the key takeaway is that Sansera Engineering is a company that's worth watching. They've got a solid foundation, a clear vision for the future, and a management team that's committed to innovation and growth.
They're definitely a company to keep an eye on. Now let's shift gears a bit and talk about another important aspect of any business, corporate social responsibility. How does Sansera measure up in that area?
That's a great point. Corporate social responsibility, or CSR, has become increasingly important. Investors want to know that the companies they invest in are not just profitable, but also ethical and responsible. And Sansera seems to be making a genuine effort in this area. Their annual report highlights their commitment to sustainability, social responsibility, and ethical business practices.
They're not just talking about it, they're actually doing something about it.
Exactly. They've set ambitious targets for reducing their carbon footprint, minimizing waste, and conserving resources. They're investing in renewable energy, exploring circular economy models. They're really trying to minimize their environmental impact.
Those are all positive steps.
They are. And they're also actively engaged in various social initiatives, education, healthcare, community development. They've even established a dedicated foundation to oversee their CSR activities and partner with various nonprofit organizations.
So they're not just focused on their own bottom line, they're also giving back to the community.
They are. And they're also committed to creating a diverse and inclusive workplace, promoting ethical business practices throughout their supply chain. They're really trying to build a sustainable and responsible business.
That's commendable. It's great to see a company that's not just focused on profits, but also on doing the right thing.
That's not just the right thing to do, it's also good for business.
Mm.
Consumers, investors, and employees, they all want to support companies that are making a positive impact on the world.
Absolutely. All right, so we've covered a lot of ground in our deep dive into Sansera Engineering Limited. We've analyzed their business model, their financials, their management, their risks, their strategies for the future. We've even delved into their commitment to sustainability and social responsibility.
It's been a comprehensive overview.
Now, let's step back and synthesize all of this information to get a holistic perspective on Sansera Engineering as a potential investment opportunity.
Okay, so big picture time. What's the overall assessment?
Well, I think it's clear that Sansera Engineering is a company with a strong foundation in the automotive sector and a clear strategic vision for diversification and growth. They're not content with just riding the wave. They're aiming to shape the future of the industry.
They're ambitious, they're innovative, and they're not afraid to take risks.
Exactly. Their financials are solid, they've got a capable management team, and they're committed to sustainability. But they also face challenges. The global economic environment is uncertain, competition is fierce, and they need to keep innovating to stay ahead of the curve.
It's a balancing act, right? Weighing the potential rewards against the potential risks.
Exactly. So what's the bottom line? Is Sansera Engineering a good investment?
That's the million-dollar question. And like with any investment, there's no easy answer. It depends on your individual investment goals, your risk tolerance, and your overall assessment of the company and the industry.
It's not a one-size-fits-all situation. But based on our deep dive, I think it's safe to say that Sansera Engineering is a company that's worth considering. They've got a lot going for them, and they're definitely one to watch.
I agree, they're a fascinating company, and I'm curious to see how they'll navigate the challenges and opportunities ahead.
Me too. All right, let's shift gears a bit and talk about their strategic partnerships and collaborations. Partnerships can be a powerful driver of growth, innovation, and market expansion. How is Sansera leveraging this approach?
Their annual report actually highlights several key partnerships that are contributing to their success. For instance, they've got strategic partnerships with some of the leading automotive OEMs, those original equipment manufacturers, worldwide.
So they're working with the big players in the industry.
They are. These partnerships give them access to key markets, a platform to showcase their expertise. They involve joint development projects, technology sharing, long-term supply agreements. It's about fostering innovation and ensuring a steady demand for their products.
So it's a win-win for everyone involved. What other partnerships do they have?
They've also got strong partnerships with their key suppliers. That ensures a reliable supply of high-quality materials and components. It's all about collaboration, working together to improve efficiency, reduce costs, and implement sustainable sourcing practices.
So they're not just focused on their own operations, they're also working closely with their partners to create a more efficient and sustainable supply chain.
Exactly. It's a holistic approach. And they've also got collaborations with research institutions and universities. That's about fostering innovation, staying ahead of the curve in terms of technology.
So they're tapping into the knowledge and expertise of the academic world.
Right. It's about joint research projects, technology transfer, talent development. It strengthens their R&D capabilities and helps them nurture the next generation of engineers and innovators.
They're building for the future.
Yeah.
So they're really active in forging these strategic partnerships across various areas of their business.
They are. These partnerships provide them with access to new markets, new technologies, new expertise. It helps them compete more effectively and supports their ambitious growth plans.
Now let's zoom in on one specific type of partnership that's particularly interesting: joint ventures. Those are a bit more involved than just a simple collaboration.
Right. Joint ventures are like a strategic marriage. Two companies come together, combine their strengths, share the risks, and work together to achieve a common goal. It could be entering a new market or developing a new technology.
And Sansera's annual report highlights their joint venture with a leading global technology provider to develop those advanced manufacturing solutions we talked about earlier.
That's a smart move. They're partnering with a leader in their field to gain access to cutting-edge technologies and expertise. It's a fast track to innovation.
So they're not trying to reinvent the wheel. They're leveraging the expertise of their partner to stay ahead of the curve.
Exactly, and it's a win-win situation. Sansera gets access to those new technologies and markets, and their partner gets access to Sansera's manufacturing expertise and their established customer base.
Everybody benefits. Okay, so joint ventures are a key part of their growth strategy. Now, let's shift gears a bit and talk about their manufacturing footprint. A company's manufacturing footprint can tell us a lot about their scale, their reach, their ability to meet customer demands.
Absolutely. And Sansera's annual report provides a pretty comprehensive overview of their manufacturing facilities, highlighting their global presence and their plans for future expansion. They're not just a local player, they've got a global reach.
So they're not putting all their eggs in one basket, geographically speaking.
Right. They've got multiple manufacturing plants strategically located across India, Europe, and North America. That allows them to serve their customers in those key markets worldwide.
Global reach, local presence, it's a good combination.
It is. And they're not just standing still. They've been investing in expanding their capacity to meet the growing demand for their products, both organically and through strategic acquisitions.
So they're scaling up to meet the demand. But it's not just about size, it's also about efficiency. How are they ensuring they can meet those demands cost effectively?
Well, their earnings call gives us some insights into their manufacturing strategy. They talk about their focus on operational excellence, cost optimization, and sustainability. They're implementing lean manufacturing principles, automating their processes, reducing their environmental impact.
So they're not just building more, they're building smarter.
Exactly. They're embracing those latest technologies and best practices to make their operations more efficient and sustainable.
It's a smart approach.
All right.
Right, they got a well-established and expanding manufacturing footprint. Now let's talk about one of the most exciting areas of their business, their foray into electric vehicles.
The EV market, it's booming, and Sansera is strategically positioning themselves to capitalize on this growth. Their annual report highlights their commitment to developing and strengthening their xEV business, aiming to increase their revenue share from this segment to 20%. It's a bold move, but they seem to be up for the challenge.
They're not just dipping their toes in the water, they're diving headfirst into the EV revolution.
They're all in, investing in R&D, expanding their product portfolio, forming strategic partnerships. Their earnings call provides some insights into their xEV strategy, highlighting their focus on those innovative, technologically advanced components for electric and hybrid vehicles.
It's not just about making parts, it's about creating those essential solutions that will drive the future of mobility.
Exactly. And they're leveraging their expertise in lightweight materials, those advanced manufacturing capabilities, and their partnerships with leading EV manufacturers. They're serious about shaping the future of electric mobility.
They're bringing their A game to this new arena. But what specific components are they developing for EVs?
Oh, they're working on a bunch of things. Battery housings, electric motors, power electronics, all those crucial parts that really impact an EV's performance, how efficient it is, and their expertise in lightweight materials. That's a huge asset here.
Yeah, because lighter weight means you can squeeze more range out of those batteries, right?
Exactly. Every ounce counts in the EV world. And what's cool is they're taking what they know about traditional auto parts and applying it to these innovative EV solutions. They're not starting from scratch, which gives them a leg up.
Smart move, building on that existing knowledge. But let's be honest, the EV market is super competitive, it's constantly evolving. What are some of the biggest challenges and opportunities they face in this space?
It's like the Wild West out there, right? Fast-paced tech advancements, consumer preferences shifting all the time, and cutthroat competition. Sansera has to be nimble to keep up.
So what are the biggest hurdles they need to overcome?
Well, one is staying ahead of the tech curve. Battery technology is constantly improving, power electronics are getting more sophisticated, charging infrastructure is evolving. It's a lot to keep up with. Thankfully, they're investing heavily in R&D, constantly trying to develop those cutting-edge solutions that'll keep them ahead of the pack.
That makes sense. You got to innovate or die in this market. But aside from the technology, isn't the cost of raw materials a big concern in the EV world?
Absolutely. You're talking lithium, cobalt, nickel. Those prices can fluctuate like crazy, making it tough to predict your costs. Sansera is tackling this by exploring alternative materials, diversifying their suppliers, and locking in those long-term contracts whenever they can.
So they're hedging their bets, trying to stabilize those prices as much as possible. Smart move. But isn't actually manufacturing EV components a different beast compared to traditional auto parts?
It is. Different materials, designs, the whole production process is different. It requires a real shift in thinking. Sansera's investing in new equipment, training their workforce, even partnering with tech companies and research institutions to develop those innovative manufacturing processes that are specifically tailored to EV components.
So it's a steep learning curve, but it sounds like they're up for the challenge.
They are. They're adapting, they're evolving, and I think they've got a real shot at making a big impact in this market.
Okay, so they're facing some tough challenges, but they're also well-positioned to capitalize on those huge opportunities that the EV market presents.
I think so. Their focus on xEV, their R&D investments, their manufacturing capabilities, and those partnerships with those leading EV makers, it all points to a bright future for them in this space.
Now let's switch gears a bit and talk about something that's crucial for any investor: corporate governance. What does Sansera's annual report tell us about their approach to this?
They're very upfront about their commitment to good corporate governance. They've got a board of directors with independent members, which is always a good sign, provides that objective oversight. And they've got those various board committees we talked about earlier: audit, nomination and remuneration, corporate social responsibility. All those committees provide that specialized oversight in those key areas.
So there are those checks and balances in place. That's reassuring for investors who want to see that ethical, responsible leadership.
Absolutely. Transparency is key. And they've got a clear code of conduct for their employees and directors, promoting that transparency and accountability. They've also got robust risk management and internal control systems to prevent problems and ensure they're doing things by the book.
It sounds like they're taking corporate governance seriously. Yeah. Now, let's talk about the elephant in the room. Valuation. How do you even begin to value a company as complex as Sansera?
Valuation is a tricky business. It's about looking at their financial performance, their growth potential, the risks involved, their market position. You try to determine their intrinsic value, their potential for future returns. It's a mix of art and science, no magic formula.
So where do you even start?
There are several methods that analysts use: discounted cash flow analysis, comparable company analysis, precedent transaction analysis. Each method has its strengths and weaknesses. Most investors use a combination of these, along with their own judgment, to come up with a fair valuation.
So it's not a one-size-fits-all approach.
Yeah.
But what specific things about Sansera should investors be paying attention to?
Well, their growth potential is huge. They're in a rapidly growing industry, and their focus on those high-growth segments, XEV, aerospace, defense, suggests there's a lot of room for expansion. Investors should look at their historical growth rates, their market share, their new product pipeline, those expansion plans. All those things give you a sense of where they're headed.
So past performance can give you some clues, but it's not a guarantee of future success.
Yeah, exactly. Another key factor is profitability. Sansera's got healthy margins, they're profitable, but investors need to dig deeper, understand their cost structure, their pricing power, their efficiency initiatives. That'll tell you if they can improve those margins even further in the future.
Profitability is key. But what about those risks we discussed earlier? How do those factor into the valuation?
You can't ignore the risks: counterparty risk, procurement risk, regulatory and legal risk, cybersecurity risk. All those things can potentially impact their future cash flow, their profitability. Investors need to assess those risks carefully, look at their risk management practices, and factor that into their valuation.
It's a balancing act, weighing the potential rewards against those potential risks.
Right. And don't forget about the human factor again. The management team's track record is a key factor in valuation. A strong, experienced team can make a huge difference. Investors should look at their experience, their expertise, their past performance, their leadership style. All those things can give you clues about the company's future prospects.
So it's not just about the numbers, it's about the people behind those numbers.
Exactly. Valuing a company like Sansera requires a holistic approach, considering both the quantitative and the qualitative factors. It's a great example for investors who want to understand how to value a company in a dynamic, constantly evolving industry.
Okay, well, I think we've done a pretty thorough job of dissecting Sansera Engineering. We've analyzed their business model, their financials, their management team, their risks, their future strategies, their sustainability initiatives, even touched on valuation.
It's been a deep dive for sure. We've covered a lot of ground.
We've explored their competitive landscape, their recent performance, those strategic partnerships. I think we've given our listeners a pretty comprehensive view of this fascinating company.
We've given them the tools to do their own research and come to their own conclusions.
Exactly, because ultimately, the decision of whether or not to invest in Sansera Engineering is up to each individual investor.
Right. But hopefully we've equipped them with the knowledge and insights they need to make an informed decision.
I think so. So as we wrap up this deep dive, what are some key takeaways for our listeners? What are the things they should really remember about Sansera Engineering?
I think the main takeaway is this: Sansera is a company that's not afraid to evolve, to embrace change. They're strategically positioning themselves for the future, whether it's through their focus on those high-growth segments like XEV and aerospace, or their commitment to sustainability and innovation. They're taking bold steps to stay ahead of the curve.
They're not content with the status quo. They want to be leaders, not followers.
Exactly. They're a company with a vision, and they're not afraid to pursue it. But it's also important to remember that no investment is without risks. The global economic environment is uncertain, competition is intense, and they face numerous challenges along the way.
Right. It's a balancing act. Investors need to weigh the potential rewards against those potential risks.
Absolutely. Do your research, analyze the information, and make an informed decision based on your own individual investment goals and your risk tolerance.
That's the best advice we can give. Well, there you have it, folks. A deep dive into Sansera Engineering Limited.
It's been a pleasure exploring this company with you.
Likewise. We hope you found this deep dive informative and insightful.
And remember, the world of business and investing is constantly changing, so stay curious, keep learning, and don't be afraid to ask questions.
Great advice. Thanks for joining us. And until next time, happy investing.